Welcome to the trade. Before we get to the charts, let's have a quick look at what traders are watching. US President Trump has demanded OPEC lower oil prices and the world drop interest rates in a speech to global business and political leaders. He warned them they'll face tariffs if they make their products anywhere but the US. Oil fell 1% after President Trump urged Saudi Arabia and OPEC to bring down its costs during his address at the World Economic Forum in Davos. Trump also ordered the creation of a cryptocurrency working group tasked with proposing new digital asset regulations and exploring the creation of a national cryptocurrency stockpile, making good on his promise to quickly overhaul US crypto policy. We saw gold prices firm as the dollar softened following Trump's call for lower rates, with market attention remaining focused on the broader implications of his policies. And the Bank of Japan expected to raise interest rates today to levels unseen since the 2008 global financial crisis, as a broad worldwide stock rally calms policymaker fears that President Trump's tariff threats could upend market sentiment. Let's get into the technicals now. Thomas Atkinson from FX Evolution joining me. Great to see you. Another record here on the S&P 500, Thomas.
Yeah, so more records on the S&P 500 to start off to 2025, and I guess more of what we much expect as we are looking at a cycle here of around 2/3 of the way through, at least that we're seeing it, since October of 2022. So good stuff coming in from the US. Obviously, the question now is, will we see the small caps, which is the screen here, the US 2000, the Russell 2000, start to improve and catch up? This is the laggard. It always is. Usually when you first see a nice pickup like we've just seen, you generally have the biggest companies coming through. At this point, the next question is, will we see the mid caps, which have already started? They're the middle kind of businesses, the ones that are worth like 50 to 100 billion. And now the question is for 5 billion to the 20 billion line. This is encouraging though on the chart. So what we've got here is we've got basically a volume profile of where I guess you would say Wall Street's biggest trades have gone through. And as you'll notice, we've got the kind of like good buy zone area, like it's an area where we've seen traditionally a lot of trades go through. That's been respected technically. We've seen a higher high where we see a line there that says markets turning bullish. And I think this is very positive for traders out there to say, you know what, things might have looked a little bit bad before the CPI, the inflation number last week. Things are now improving. And there's a real possibility here that the laggard, the US 2K plays catch up, gets back to that 2440.
Wow, that's a very interesting chart. All right, let's look at our market. We're not quite at record highs, but we are having a good session. What are the technicals showing you here?
Yeah, so it's more of the same. Again, we've got a histogram up here. It basically says the volume profile. The biggest ASX traders, I guess you would say, have been buying a lot, or at least transacting a lot at 8,200. We have to assume it's purchases because the market is obviously up from this point. But yeah, a series of higher highs and higher lows. There's a red arrow kind of pointing to that most traded zone and how it reacted around there. And we had some what we call wick candles, which are basically, I always like to see them as excitement of the traders. That is, if a market goes down and then all of a sudden rejects with this huge wick, then effectively it's telling us that someone's kind of liking it. We also have down the bottom a MACD switch to the positive side. And as viewers can see, when that happens, it tends to be relatively sustained. So I think that the start of 2025 is looking quite positive. It's certainly more murky than 2024. I think 2024 was much more easy to see as just bullish all year, but start so far.
Thomas, when it comes to gold, some of these forecasts are that we are going to get 3,000 very, very imminently. But then do we see a pullback? What are you sort of seeing with the gold price?
Yeah, so you'd know that we've been on the show now for a long time, and I've always been going towards gold 3,000, even at 1,800 an ounce and even below that. So I guess my forecast has not changed on gold. It's still very positive. Look, 3,000 is going to be that magical number that people look at. Usually, what I did here was I used a Fibonacci extension, and I've highlighted that by using a red box above. And basically, everyone's going to be looking at the magical 3,000. Generally, in technical or kind of like street algorithms, what they tend to do is they either stop just before and then sell off, or they absolutely blast it. I doubt 3K is the number. 2950 is certainly a resistance, so I think there will be some selling just before 3,000 if we do get up there. And then, of course, if this market doesn't stop at 2950 for whatever reason and pushes 3,000, I think it would be well above 3K before it stops. And you saw that with Bitcoin. Bitcoin stopped 99,500, sold off quite drastically. Then, of course, flew through 100, never stopped at 100, just kind of like blitzed 100 and went to 105. So same thing for gold. I think the pullback in time, that is the market staying sideways, which we can see highlighted between around 25.50 and 27.50, looks to be done with. And the market is certainly acting very positively. I think you want to be looking at US dollar weakness. If that comes through, and gold could seriously move a couple $100 fairly quickly.
Well, let's move from what you just touched on with Bitcoin then to what we're seeing with Ethereum, which everyone says is the better way to play the overall blockchain momentum. What are we seeing here?
Interesting, everyone's saying that. I mean, most reports I see are people claiming that Ethereum is the worst coin out there because it's too expensive and too slow. Obviously, Solana is the pick that a lot of people have been looking at, but Ethereum has always been kind of that second to Bitcoin. This time around, we've seen the ups of XRP, and we've seen ADA, and obviously Solana. But look, I like this technically. This is a very good base level. Again, we've used the most traded zone, so you can see around 33.50 is where everyone seems to be transacting, whether it's bullish or bearish. And I see a downward trend line here, which we've highlighted with that red arrow. And basically, it looks like somewhere around 34.50 to 3,500 would be incredibly bullish for Ethereum. It would finally start to play catch up. A lot of people losing incredible faith in Ethereum. I've seen communities on fire in terms of fighting with each other about whether Ethereum's still the second best. And I think when everyone loses faith in something, if the technicals start to look better, that often is a very bullish sign. So 34.50 to 3,500, something to watch here for Ethereum and crypto traders. And it is a great technical. So we'll see whether that one can hold up.
Yeah, and just on that point, I should say who told me that. It was Ian Love from Blockchain, losing my mind now, Blockchain Assets, saying that Ethereum's the best way to actually trade the internet. All right, let's move back into some of the stocks that we're watching, and we've been very closely looking at the China picture as well and what's happening with iron ore. What is Fortescue showing us?
Yeah, so with Fortescue, I guess the key here is that iron ore has actually made a higher high. So people have a lot of concerns over a glut, which is rightfully so. I mean, so much iron ore in the ports in China, and obviously a struggling economy. But that's in the news. I guess the theory is, what are we seeing in the price? So the price is moved up in recent times from being pretty low at the start of 2025. Had a really good move up to $19.50. It's now pulling back down. You'll notice I highlighted a red box. That area is basically the most traded zone again. So it's where we've seen the most transactions go through on the charts. And we've also got a Fibonacci level coming up soon as well, which is around $18.20. So these should act, you would think, if buyers remain in control, that they should find some buyers around here. And that's potential. Also seasonals, going into earnings. So in Australia in February, and traditionally been okay for the iron ore miners. So hopefully Chinese New Year and everything else kind of acts positively. We're about to see whether the market likes iron ore or not.
Indeed. We're also about to see whether or not these calls to sell the banks come true, because people love a dividend. What are you seeing with ANZ?
Yeah, so I think I could definitely see why that is. The valuations are pretty rich on the banks, but ultimately the valuations have been rich for some time, and the market kept going up. CBA, for example. This is an interesting one. Again, people are probably going to be able to point to two different things here. You could also point to what we call a head and shoulders pattern potentially forming here if the markets end up choosing to sell off. But I think what I've seen is that 27.90 area, it's clearly been some form of buy pressure there. We know there's a huge amount of transaction that's gone through between 29 and that 28. It looks like buyers like that. And I think that's kind of important. We've also seen a break above. We've got great financial news coming out in the US. I mean, they're making bumper profits. JP Morgan just made the most it's ever made by far. So what's to say the Australian banks aren't writing a lot of loans and doing okay? So at this stage, I think I'd go with the trading momentum more than, it's overpriced, because things can remain overpriced for longer than people can remain solvent sometimes. So I think the price action's healthy, but we'll see what happens after.
Yeah, remember the trend is your friend. All right, Thomas, you are an AusBiz friend. Thank you, as always. Thomas Atkinson there from FX Evolution. That does it for this edition of The Trade. Be sure to join us next time.